welcome to the closing beat, everybody. Happy Thursday to you. How's it going out there? All's good? That's a cool song, right? That's like one of my favorite songs to play on here. Welcome. We're financial advisors here at Jazz Wealth, or you can go to dostraight.com. DOHSTR8, right? Still a thing? There you go. If you want to buy that domain, you know what I mean? Just got to come with the dough. Anyways, welcome. While other financial advisors are playing checkers, we're playing chess, but more importantly, I'd like to share those chess matches with you here tonight. It'll be a Wine and Wealth open house at 8 o'clock, and it'll be with me and Eric at the same time. It'll be Eric's show. I was just going to kind of hang out, answer questions and everything, and we're going to go through one unique tip for each type of account that you have. And chances are, once we get going, it'll probably be a couple tips for each one. But, you know, I got some. I got some I'll share with you. So I hope you'll join us later tonight. It'll be on YouTube. You'll just be able to come right on in and watch. And if you're a client, just go right into the portal. It'll also be on there, right? Right. Okay, right. Yeah, I was just curious. Anyways, let's take a look at the stock market here. Do we have a winner? Do we need to do the winner thing? Or the leaderboard? Go for it. What we got? Oh.
Yeah, big change from yesterday. We got Aaron, Vanessa, Hannah, Greg, and Jarek in your top 5. And fun fact, the last 3 weeks, the people who have been in the top 5, the winner has come from the leaderboard on Thursdays. So congratulations to them 5, one of those people.
You want to hit them with the stat one more time there? Because I don't think it worked.
They got me. They got me. I'm listening to me right now.
All right.
Yeah.
What happened to Tate, man?
What's happening? The winner of the last 3 weeks has come from the leaderboard on Thursdays. So one of these people are going to win, whether it's Aaron, Vanessa, Hannah, Greg, or Jarek, guaranteed.
Yeah, I'll be. All right.
Why do you look so...
I don't know. It just didn't look like it was working there. But if it's working, I turned it on for a sec. I clicked something. I shouldn't have clicked it.
No clicking.
I should have trusted the process. I did not trust the process. Moving on. All right, so let's take a look at the stock market here today. The S&P giving you a little bit more confidence, maybe just a little bit to the upside there. That occurred little by little throughout the day. Defensives were the ones to lead the way today. You got utilities now up over 4. Let's do it this way. Let's go over here. There you go. So here's our sector breakdown page. Utilities up over 4% in the last 5-day window there. They were one of your leaders here today. Real estate is going to take the top spot overall. I might point out that utilities, in terms of returns, beats energy. So all the focus, hey, energy's doing so well. Well, actually, utilities is sneaking by you there. I'm not sure that's 100% where you want to be at the moment, but depends on how the rate decision goes next week. Largely expected not to do anything there. Energy's only up 2.5% over the last 5 days there. And I want to mention in utilities, I know it's not exciting. It's not an exciting area. I totally get it. But if you look, it's a broad rally. This is today. Here's every stock inside of the utility sector. Broad rally. Look over the last 5 days. We got nobody lagging there. So it's not because of a stock choice. It's not because, for example, Nextera is about 15% of the entire weighting of the XLU or the utilities. So what could happen is Nextera could have earnings or some news or something like that, right? And that could cause like a big move that ultimately pulls the index or the sector higher. Well, that's not happening, right? We're actually looking pretty good here. So over the last 5 days, we're looking good. Over the last 1 month, those that have been weak have obviously recovered, right? Their losses are not as big. So the reason that I say all of that is because one day doesn't make an investment. You know what I mean? It's not a casino. Unless you're a day trader, then it's a casino. But so that's important to see that for whatever reason, if we go on over to utilities, this rally right in here is broadly bought. Boy, we'd like to see that in the stock market, wouldn't we? You'd like to just see everybody broadly buy it, not just picking on those top 7 names. And that's what you got there. Okay, let's go back over here. REITs were, of course, I said the best here today. That turns them positive over the last 5 days, right? So just turning positive there. There's only 2 sectors left that are not positive over the last 5 days. That's okay too, right? That shows that every sector is at least trying a little bit to participate in this rally today, helping out, of course, with lots of gains across the board. Only a handful of sectors didn't gain more than 1% there. If you look inside of REITs, though, it is not a full-on rally. If we look over the last 5 days, we've got a little bit of trouble here. If I go on down to something like Simon Property Group, Let's see. Oh, there we go. Simon Property Group, and looking at their competitors, okay, or people that are like them, right? Not so bad. You don't have a problem with that. You start looking around towards the cell tower REITs, and you go, ooh, okay, they're not all participating. I don't know why. Maybe there's something going on there with the more commercial space, and yay, we're going to go out and buy more stuff, and retail sales can finally get going again. The argument being that the shelves have cleared off. We don't have to offer so many discounts now. We can now test new products and see if people buy them. That didn't happen through COVID, remember? It was just about sell as much as you can. People got money, let it go. We can offer discounts because we want people to come in and do all this. Well, we don't have to do that anymore. You notice that? You go to the store and it's like, it's a few less sales. That's kind of tough. I'm not so sure I like that. Anyways, moving through, that's the S&P. If we take a look at the NASDAQ, very similar. Of course, it was a bigger day. There's a little bit of divergence going on there. The big names, you know, the top 7 names there, maybe slowly just starting to crack. Here's not the best way, but here's a way to share that with you. What we're doing is we're looking back 6 months. We say, okay, everything's moving together. They occasionally had, you know, one stock had a bigger move here. For example, you have Tesla had a bigger move than anything else there in that little short window. Of course, you know, the NVIDIA gap from the earnings there. But all in all, they're all moving together, okay? What we've had recently here is NVIDIA starting to crack just a little bit. It's not bad. This is very early. Just starting to crack a little bit. Now, all of a sudden, we got Apple. Ooh, it's not playing along as much. Everybody else is still doing okay. But little by little, with one cracking, a couple days later, well, about a week later, the next one cracks. What's next to come here? Is it Alphabet that could be next? Is it those that have potential lawsuits and questions wrapped around how that's going to work that are to come next? We'll see. I don't know. Just something I want to point out to you as we take a look here. If you look at the Dow, that gets all the headlines today because it's a big number. 300 points higher. Yeah, all right. It's just because it's a big number. When actually throws off your guess the Dow game because that puts us into the 35,000s now. But that's what's going on there. Oil, we're above 90 bucks, right? About Thanksgiving time last time when you saw that happen before, and there is no end in sight. There is no need for oil to be under $85 a barrel. That is pretty much general consensus there. Sadly, this is attractive to me because I like when things get overextended except for oil, so I look the other direction. Looking at rates here real quick, just to jump through a couple things, and then we'll get to the rest, take your questions. Looking at rates not coming off of lows. Yesterday was a good attempt to do that. Today, just they're not feeling it there. Expect this, right? This back and forth sort of unpredictable, tough action until we have the Fed meeting. Right? And like I said, the Fed meeting largely expected not to raise or cut or do anything. And if you like, I could put together like all their comments. We track all of that. So we could kind of see if you need confirmation on that. Maybe if it's a boring couple days or something. I don't know. All right, so ask yourself, is it easy here at this point to be aggressively bullish, or is it a little tough? Is it easy? Or is it a little bit tough? To do that, you got to think ahead. And so all the things that's going on in the news right now, ooh, ARM, look what ARM did today. All right, it's impressive. But what's coming? Look on the horizon. We've got the Fed meeting. We already had the inflation numbers there. We have student loans coming back. That's going to suck money out of the economy, right? Or money out of that part of the economy. If student loans were back in full force, that's $70 billion that needs to get paid. Okay, we don't have as much money to spend on the fun stuff there. There's, of course, the repayment plan, and they're working on all of that stuff, aggressively marketing it, by the way. But nonetheless, we've got that restarting, okay? October 1st. We have the government shutdown. It's pretty much likely that they're going to shut down at this point, at least with what's going on now. And of course, most currently, you have the potential for a strike. We'll talk about that in a little bit. All of that will hit GDP. All of it. And it's actually quantifiable. You can actually take a look and see how that goes through, or how that would go through. Student loans are tough to analyze because we don't know how many people will have officially qualified, signed up and qualified for the new repay program, the Biden program there. A lot of people will qualify, actually, but how many people do it, we're not entirely sure just yet. The government shutdown seems more likely at this point based on the bickering that's going back and forth there and how far apart they are at the moment. Does that sound familiar? And then the United Auto Workers strike. You know, the three companies that are, I got a thing. The three companies that are potentially going to be hit by this strike, although maybe something, the 11th hour, we'll see. They make about 50% of all the cars that we make yearly. Okay, that's going to hit GDP, right? So you can actually quantify that. The impact, because the strike might happen tonight for some or all of them, and that's technically Q3, right? So we could see the impact in Q3 GDP there. If not, most of it would be Q4 if it draws out, if this is not like a one-day strike or something and that actually happens. It depends on the length. We'll see. If you're looking for a little bit of history on that one, as a whole, United Auto Workers had a strike in 2007. That lasted 3 days. And then in 1998, as a whole, there was a strike that lasted 54 days. So obviously not a lot of data to go on there. You also had that walkout in 2019, just a couple days there as well. No, maybe that was double-digit days. I don't know. Anyways, that takes away from GDP. Just a little strike. I mean, look, I know you guys are passionate about your strikes, so I'm not going to get in the middle of this one, but that takes away. Goldman Sachs actually calculated it and said it's about 0.1% of GDP per week of the strike if that happens. It doesn't sound like a lot, but we don't have an economy that's growing full-on gangbusters here, right? It's been a while, besides the COVID rebound. Anyway, so that makes you wonder, should I be aggressively bullish here? Is there a lot coming at me here soon? I didn't even mention the lawsuits, Amazon and Alphabet. I didn't even mention that, right? Careful. All right, stocks in the news. Really, today was just a bunch of upgrades, downgrades, because the world is focused on Ford, GM, and Stellantis. I was thinking Tesla. I said Stella. No, Stellantis. Those are the three. Again, they make up 50%. I just showed you the chart about that one. The way they're going to go about this one, supposedly, unless something has changed since we've started the show here, you have what's called targeted strikes. So it's not a full-on stop across the board. This is going to be targeted, which is more surgical, right? We strike at a couple different places that will impact the other places without those people needing to strike. They want to do that because, remember, technically the United Auto Workers need to pay. They need to pay people if they tell them to go on strike there. So they basically said, we're going to surgically strike, and then we'll see how the negotiations are going if we decide to call in other things there. There's a lot of legal issues as you look through it, but we'll see what happens there. I noticed just before we got started here, General Motors this morning upped their offer a bit. 20% pay increase there, 10% after 1 year. In addition to that, if you work for General Motors, you're going to get Juneteenth off. That was part of their offer there, and up to 5 weeks of vacations. Interestingly enough, like that's all stuff you can read. Let's do something fun. The total amount of their new offer comes to just over $3 billion as a cost to them over the life of the offer, right? Comes about $3 billion. Their 2019 walkout that they had, that actually cost them $3.6 billion. So somebody looked at the numbers and was like, look, we can go up a little bit. You know what I mean? We can go up a little bit. Well, it cost us this much last time. We had to charge it off. Let's just do it. Let's do that. We'll see. All right. I think they're still far apart, though, from what I understand. I'm not paying as close attention to this one, but remember the United Auto Workers essentially wanted 32-hour work weeks, but being paid for 40. And I think we're still far apart on that one. So we'll see what happens there. Also, let's see if I can go to, can I go to Cody? Huh?
I think so.
Dude, the California Skittles ban is going to be on the governor's desk today.
Wow.
Yeah. Yeah.
Crazy.
Yeah, I know. You're just dumbfounded, right? Look, this blows me away. I'm a bit of a candy nut. I keep track of this stuff, right? No, it's not a Skittles ban. The headline says Skittles ban. And now California knows how us Floridians feel because it's being labeled the Skittles ban. They're not banning Skittles. Read the article there. It's like the don't say gay thing here in Florida. You know, that wasn't in there, but you read the headlines and you went after it. They just look, they're saying, hey, do us a favor. Take a few things out of it. Let's maybe not put, what was it, red number 3? We could just get rid of that. Who needs a red Skittle anyways? That's how it goes. So that's a non-financial headline to again ask you, read. When you see so-and-so's earnings were, you know, blockbuster, well, why was the stock down? Read more than the headline. You know what I mean? They're getting us with these headlines out there, man. It's killing me because it gets me too. I've fallen for it. And then you read the headline and you're like, nah, that was clever. Yep, you got me. Anyways, open house here tonight for Wine and Wealth. We'll be at 8 o'clock live here on YouTube. If you want to know one, probably more, unique tip, trick, or rule that you didn't know about each account, we're going to go through that. And as always, we'll take your questions and hang out with you for a little bit as me and Eric probably just, chill and spend some time with you guys. You know what I mean? I knew I'd get you guys. So secretly, I was like, I'm going to throw something in there about California and just get you fired up about California. I love it. I love it. I love it. So other than that, I'll take your questions. I'm basically done. If you look under the surface of the market today, a lot of interesting things, but I don't think a lot of like confirmation moves where you go, yeah, look at this. The whole market's ready to go. This is on fire. That could change. But for the moment, it was like, yeah, there's a lot of interesting things going on out there that maybe shouldn't be going on. Norwegian Cruise Lines was, I think, the best performer in the S&P today. Really? So things like that just make you pay attention, I think. CarMax, and yeah, well, here's my list. CarMax, Match.com, you guys in your Tinder, right? So all of that under the surface is like, okay, that's kind of interesting that they participated, but that's what it is. Yeah, I knew somebody would probably be following that one today. Your arm, so they're going to come up. Close at 63, after hours 65. I'll give them a good 25%. So they'll feel like they left something on the table there, but we'll see, right? It's just day one. Yeah. The difference between the California bill is to protect the people, not to harm them. I did read that the red number, now I didn't know this, the red number 3, which is pretty much in a lot of stuff here, right? We use it in the cherries and stuff. I saw that. That's pretty much banned in Europe. I didn't know that. You can use it in candies and stuff, but they saw some problems with potentially cancer there, and they said, well, let's just get rid of that. All right. Just get rid of it, right? Is it going to change the taste? I don't know. I'm willing to try, though. Yeah. Sir Francis says, man, you just don't fall for that FOMO. It's going to get you. You think so? I didn't follow it enough today, but I kept seeing it pop up on the TV, but yeah. The defensive move is interesting. That's why I led with that one here today. Yes, I would agree. If everything's so good, why is that the outperforming sector? Now, one day doesn't make, you kind of just take it with a grain of salt and keep track of it there, but that's what you got. We'll see. I think you have the strike thing taking the attention here, probably for the rest of the evening and into tomorrow, depending on how it goes, right? MW, thoughts on Boise? What thoughts do we want here? There's obviously nothing going wrong for you. It's looking pretty good. If you own it, you're happy. A little pullback here. I don't know what your thoughts are there. But nothing looks horrible there. A little more. This is always tricky to answer that question, right? Like do you own it? You're thinking about buying it. You're trying to sell it. You're wondering if this is the last of the top. Things like that. There we go. Got the politics started. All right, we'll skip all of that. We're going to be here later to teach you things that you can actually do things about with your dollars. All right, we're going to focus on that one there. And questions like that, actually. Roth question, can you withdraw your contribution at any time, but can you put it back in? No. No. I should say partially. You can withdraw your Roth contributions, and you can put them back within 60 days, but after that, it will count as a contribution if you put it back in there. Yeah. MW, is that the SCB that I think you're talking about? They're back, baby. They're back. It's gonna be a big year. All right, I'll wrap it up there. We will see you just a little bit from now, actually at 8 o'clock. I thank you for watching, and enjoy the rest of your evening. Adios.
When you wish upon a star, makes no difference who you are